Al, as I ended that last segment, we've already covered the shorter term trading assets because we have a lot of listeners that want to understand more about that short term trading strategy, whether it's daily, weekly, whatever that may be. Now, in this segment here, we have a lot of listeners that have retirement accounts, 401ks, IRAs, and the market has been soaring for the past several years, but they're noticing their accounts are not doing the same thing. There's a disconnect there. So they feel like they're missing out on a lot of the returns. What are some of the longer term assets that you've been helping a lot of people come into these investing classes learn more about to utilize in their retirement accounts, whether it's a 401k or even an IRA?
Yeah, I think a lot of people are coming in and they finally are realizing that they're getting a fraction of the upside move in these markets, but they experience the full impact of a correction or a bear market. And that has had a huge impact on what they have in retirement. The things that we mentioned earlier, the things that you use for short-term goals and for long-term goals are different. The short-term goals we kind of covered with those assets like futures, forex, and options. By the way, those are leveraged assets. So that is where you have a smaller amount of upfront money that's controlling a larger investment. It gives you the great opportunity of increasing your rate of return with a smaller amount of money in the actual investment itself. It's sort of like a down payment on a house, a mortgage, or a car loan, something like that. And leverage is what the institutions are using. That's a great way to start building assets for your retirement. But then also you should have a long-term strategy. That's probably going to be a stock portfolio, but it's not something that you should just put together and then just kind of put it on cruise control, let it run. There are things that you can do. Some of these assets that I've mentioned, especially options, can be used with your stock portfolio to increase the returns, also to provide protection. If you look at the market since, let's say since 2009, the S&P 500 has been up almost 500% since 2009. The NASDAQ has been up about 1,300% in that time period. What about you? What kind of returns are you getting? And I'm not saying that you'll get those same kinds of returns. There's no guarantee, but there is, I guess the guarantee is that if you don't try to use some of these assets and some of the strategies that can help benefit your portfolio, you're going to have to just be happy with the mediocre returns that most people are getting. But think about it. What's the largest asset that you have? It's probably either your house or your retirement account. And maybe for most of you, if you've worked 30, 40 years, you're getting ready to go in retirement, your retirement account might be the biggest asset you have. Well, think about it. What do you know about your house? Pretty much everything. You know what the value is. You know what your taxes are. You know what the insurance costs are for you. All of these things you know about your house. But what do you really know about your 401k or your 403b, whatever your employer-sponsored retirement plan is? How much do you really know about that? Well, if you don't know much about it, that's not a problem. You can just call, what's his name? The person managing the biggest asset that you have. You may know the name of the plan sponsor, but do you really know who is controlling your assets?
It's a stranger.
It's a stranger. Even if you know the broker that maybe put that plan together, they're not managing the money. They're handing that off to, say, a mutual fund manager, somebody who doesn't know you, who you don't know, and you're put into something with thousands of other people, and your specific goals may not be met the way that you want them to be met. You can actually trade within those accounts, those portfolios, if you know what you're doing. And you can use the core strategy that I mentioned, where we can identify, even with mutual funds, you can identify those elephant footprints in the mud. But you have to know what you're doing. And that's one of the things that we cover is what we call dynamic 401k management, how to get better potential returns out of your retirement accounts, how to protect what you have, lower the costs. But the real benefit, I think, for people when they go in retirement is understanding that they can take control of their assets and eliminate some of the biggest disadvantages to an employer-sponsored plan. That's the fees that are sucking money out on a regular basis. That's the exposure to market corrections and crashes. And what I'm talking about is a self-directed retirement account, an IRA.
Yeah, I'm glad you brought that up because, a lot of people don't really know who is managing their really their future, their
Correct.
life savings, or their future to retirement. I'm going to ask you a question, Al.
Go ahead.
Who is the best steward of your capital, of your money?
For me, it's me. And for you, it's you.
It's going to be probably yourself, right?
Exactly.
No, what's one of those things that we teach kids at a young age? And you probably don't know where I'm going with this, so I'm going to lead you, right?
Well, okay, let me just take a wild guess. We teach them to not talk about money?
No, you're close.
Oh, I was wrong again.
But we teach them stranger danger, right?
Okay, you're right.
And as strangers are managing the life savings of most Americans. Now, that's a problem. We teach our kids to stay away from strangers, and then we let strangers manage our future, so we kind of forget about that. I think that's an important concept right there, because you are going to be the best steward of your money. Nothing against these people,
Right.
but it's the business. It's the way things are set up. So you have to learn the skills, the techniques to really be the best steward of your money and have more control of that future. So Al, you mentioned the best way to do that, or to eliminate the fees, which is one of the components, is by self-directing.
Right.
Just explain a little bit more what that really means, because a lot of people think you have to have somebody else manage your retirement. So people say, "Oh, what are you going to do with your retirements?" "Oh, I got to find myself a broker." Well, do you have to do that, or what's the process to be the best steward of your own money?
Yeah, it's easy to do. We talked earlier about some of these companies that might control the news, control what we believe to be the truth out there. And the reason that they have to do that is that their bottom line is based on, in large part, by taking advantage of us and basically just making sure our money goes from us to them. We have been conditioned by these guys to believe that we can't do this, that maybe we're not smart enough, maybe we don't have enough time, maybe we don't have enough money, all of those things that we buy into and say, yeah, I need to find my guy, I need to find my gal, somebody who's going to take control of my assets because I can't do it. And you believe that, but really what's happening is that you're being conditioned to do exactly the opposite of what you should do, and that is taking control of your assets. Think about a financial advisor that is in control of your assets. Are you the only client that person has? So every day he is waking up or she's waking up thinking about you, how to get best performance out of what you have, make sure everything is protected. No, they might have an additional 200 or 300 other clients that they are also are responsible for. So it's much easier for them to put you into something that is managed by somebody or a group who, by the way, you're paying to do that. So we've been conditioned in the wrong way to believe things that are fallacies. And those are the things that we talk about in these classes too. You can control your own assets. You can set up a self-directed IRA. Very easy. You can do it online. If you have a 401k and you're no longer working for a company, you can roll that into a self-directed IRA.
Is there a penalty for that?
There's no penalty as long as it goes from one retirement account into another retirement account.
And you've helped a lot of people do that.
Absolutely, sure. And most people have I think they're of the opinion that when they leave a company, the best thing for them to do is leave their money in that 401k, or maybe if they move to another company, to roll that money into the other company's 401k. Remember, when you have whatever the employer-sponsored plan is, you're paying a fee to somebody basically to let you make your own decisions, and you are, you're really at the whim of the market. If the market corrects 50%, you're probably going to go down 50%. And when you go into retirement, the last thing you want to have happen is something like that. What you don't want to hear from your broker is, don't worry, it's going to come back. If you're 65 or 70 and it might take 15 or 20 years for it to come back, that's not a comforting thing to hear. So the self-directed IRA, you can have the same investments in that IRA that you have in your 401k, or why not look at some other things that give you a greater opportunity to benefit in not only in up markets, but down markets, sideways markets. What about insurance? A lot of you might have insurance on your home, or maybe an umbrella policy that covers almost everything. You can do that with your assets, with your portfolio, if you have a self-directed IRA or just a regular investment account. And those are the things that we teach and we talk about in these classes.
Yeah, and here's I would assume anyway, that with the markets at all-time highs, people are the most wealthy that they have ever been.
Sure.
If you're not, there's a disconnect there, and I'll think about that. But here's the key as well. If you're unsure, okay, if you're the most wealthy you've ever been right now, and you're unsure you're going to have enough to retire or have enough to stay retired, you're going to have to take action before that happens when you are at that point, because you don't want to take action when you're not there, right? Or you're not even close. And Al, coming up next, we're going to do something a little bit different. I want to do a little bit of a market recap and some of the opportunities we see moving forward here, so our listeners understand more about some of the different assets we've been talking about.
Sure.
We will be right back.